Great, great. Okay, we're just about starting. I'm expecting 58, 60 of you, but we'll get started anyway. Okay, if any of you will want to switch on your camera, you are more than welcome. Otherwise, if you can't hear me when I'm speaking, then do let me know. If you have any questions when I'm speaking or even after I'm done talking, then you can just unmute your microphone or you can raise your virtual hand or actual hand and let me know that you want to say something, or basically unmute your microphone if no one is talking and you can ask your question. Okay, can I probably start by asking how the course has gone so far? Can anyone respond? You can use the chat forum or you can say something briefly. Hello, speak to me. Okay, can you still hear me? I'm not sure my question. Okay, so what I want to do then is, sorry, I sent wrong reply to the wrong person. Okay. What I want to do today is to just give you an overview of Unit 3. Someone asked what time will we finish today. I'm hoping that we'll be done by 1 o'clock. So it's just an hour or probably less, depending on how many questions you will have or depending on your level of participation. So the plan for today is just to give you a brief overview of Unit 3 and then open up for question and answer. So if you have any specific question, the material has been available from Monday. So if you have any specific questions for me in relation to the course or in relation specifically to Units 3 and 4, then you can ask those questions. Okay, I'm going to share my screen. I do have a few slides. I hope you've watched the video, the introduction video that I've posted on Moodle. It's a relatively short video, and so hopefully you've seen that. If you haven't seen that, I will recommend that you go over there now and have a look. Okay, right, so as I said, I cannot see everyone on screen. So if you have a question, do not hesitate to ask. And you can use the chat forum. I should be able to access that as well. Okay, so first of all, just some general information about the course and the extent to which you have engaged with the course so far. One of the things that we hope that you will actually engage with is the learning material that we are posting on Moodle, because that is going to be key if you are to complete the course. So, what's the content of Unit 3? Trang has already covered Units 1 and 2, so I'll be covering Units 3 and 4 of the course. Unit 3 comprises 2 lessons. Lesson 7 will deal with consolidated financial statements, which you have started this Monday. And yes, I will upload the slides once we're done. These slides are very similar to what I've used in the video as well, but I'll upload these ones because there's a few things that I've added on. So Unit 3 comprises two lessons. Lesson 7, Consolidated Financial Statements or Group Accounts, and then Lesson 8, Segment Reporting and Foreign Currency Implications. In Lesson 8, we'll be looking at how we translate group accounts, say a foreign subsidiaries account that is presented in a foreign currency, into another currency that we use for presentation of the group accounts. Okay, and then Unit 4 also comprises two lessons, which are relatively shorter compared to Unit 3. So Lesson 9 will deal with corporate governance and issues with international audit. And Lesson 10 will deal with IFRS and the future, perhaps the shortest lesson so far. So you can see that the time schedule that you have for completing this, Unit 3 is a relatively bigger unit. So you have 3 weeks to complete that. Unit 4 is only 1 week. Unit 4 is a bit more discursive and is relatively very, very short. So I would expect that these will be completed in 3 weeks' time. Well, 2 weeks' time, because 1 week is already gone for Unit 3. And the final week of the semester will be for corporate governance and IFRS and the future. Okay, so I'm not recording this session. This is a Q&A session, just to put that out there. And so feel free to ask questions, turn on your camera or say something. You will not be in a video because I'm not recording this. I have already recorded this particular introduction and overview, and the video is on Moodle. So each of the lessons that you will find under Units 3 and 4, each of these, similar to what Trang has already done, you'll find video introducing the lesson. You'll find lesson notes, which are built in Moodle books. These are Moodle books that will allow you to download even in a PDF format so that you can actually have a look at them offline. You also have class examples, and I've posted class examples, questions and answer, so that you can see the overall picture of a calculation, for example, or a computation of a particular concept. So for lesson 7, for example, I've posted a complete set of consolidated financial statements, the question as well as the solution, so that you can follow the full steps. Also, you'll find Moodle quiz. The understanding is, or my expectation would be, that you would have gone through the introduction video, you've gone through the lesson notes, you've gone through the class example, and then you'll be in a position to attempt the Moodle quiz. Once you've done that, then you can go on to do the online groups, small group activities or practice questions, which is the preparation for you to do before the live session with your tutor. But there's also an online anytime discussion forum for every lesson. That discussion forum has been created or designed so that if you have any specific question that you want me to address, then you can post it to that forum. I've created a forum in a way that only people within your small group activity session or your tutorial group will actually have access to whatever you post. In other words, these are people that you already meet with in your small group sessions. And so therefore, I would recommend that if a student posts something on that forum and you want to respond, then by all means do. But I will also try as much as I can to respond to your posts. Okay, so those group activities, the discussion forum will be on Moodle, but also practice questions. Just as a reminder, the course is designed to be delivered asynchronously. So we have online anytime lectures, activities, and of course, this session that we have every Friday, a Q&A session, which is synchronous, but really it's just to have an overview and of course to take questions from yourselves. The online discussion forums are there for you to ask specific questions that you have, or indeed, if you want detailed explanation of anything that you don't understand. So please do not wait to the last minute. Ask as many questions as you want. We are here to help. Okay. One important point that I want to make is that it is really important for you to be able to complete each unit by the completion date. So I said unit 3 is for 3 weeks and then unit 4 is for 1 week. On Moodle, I have indicated the completion date of unit 3. So when unit 4 is available, the completion date will also be there. Try as much as you can to go through within that time. Carefully study the lesson notes, okay? Watch the videos to the end. And I will show you a very brief statistics of who has actually attempted to watch those items and actually view the lecture notes up until today. Okay. Participate fully in the online workshop. So like today, I'm expecting at least 60 of you. It's a relatively good attendance. I've got about 36 of you. So that is relatively good. But I would expect that everybody will come along, especially when important issues will be discussed. That said, everything you need to complete the ILOs of the course are online on Moodle. But it's always important for you to engage with the lecturer and the tutor. And so therefore, if you have any specific questions, do not hesitate to contact me. Okay, you already know that these live sessions will take place each Friday between 12 and 1 o'clock. So it's just 1 hour. And hopefully in the next 5-10 minutes, I'll stop talking so that I will allow you to ask your questions. And I'll post these slides on Moodle as well. These are the Fridays that we'll have this Q&A. What I'm going to do today is just to give you a very brief overview of lesson 7, group accounts, and then next week we'll look at lesson 8 and so on. You already know where the Zoom link is, so hopefully next week everything will be fine as well. The same Zoom link is there for each of these Friday sessions. Okay, brief statistics. This week's engagement. To what extent have you actually engaged with the learning materials that are posted on Moodle for Unit 3? I would say it's negligible because very few of you have actually gone through the whole material. I mean, I'm not expecting that you would have covered all of the material by today, but from Monday to today, only 8% of you have actually viewed lesson 7, the Moodle book, that is business combinations, introducing you to business combinations. So only 5 of you have actually viewed that and gone through everything. Only 7% of you have viewed lesson 7B, which is a continuation of group accounts. Some of you have jumped lesson 7A and B, and you've gone straight to the class example. So it's really important that you go through the notes step by step, and of course, get in touch if you have questions so that we can guide you through areas that you need explanation for. And then you'll be in a position to attempt the class example. The Moodle quiz, some of you have already looked at the Moodle quiz, but even then, only 3% of you and only 3% have viewed the small group activity. So in other words, what I'm trying to say is try to engage with the material, because when you engage, you probably will have many more questions to ask and we'll be more than happy to help. Okay, so in the next 5 minutes, what I want to do is to give you an overview of what you are expected to do or to learn in lesson 7 under unit 3. And next Friday, we'll have a brief overview of lesson 8. So what do we have to do in lesson 7? We're looking at business combinations, how parent companies prepare group financial statements. The main standards that we will want to look at under this particular lesson is IFRS 10, 3, and IAS 28. Okay, the video already explains this. So if we have a situation where the parent company, and I will refer to the parent company as P, a subsidiary company as S, and an associate company as A, just to clarify that. But when one company acquires a stake in another company or in a number of other companies, the treatment that results from that acquisition could lead to a different type of relationship or different types of relationships. What we want to do is to be able to identify that relationship, and then we'll be able to apply a specific accounting model to that particular relationship. So what I want to do is to briefly explain the types of relationships that could exist. Let's assume the parent company acquires a small stake in another company, S. Let's assume S only has 100 ordinary shares. So these ordinary shares are the voting shares, and P only acquires 100 of those shares. This means that P only has 10% of the voting rights. And so there really isn't that much influence from P, because if you have 10%, the remaining 90% will make all the decisions or most of the decisions. So therefore, the kind of relationship that exists between P and S based on this investment is a simple investment. Okay, so in other words, S should not be consolidated. S is not part of P's group. It's just a simple investment in S. When that happens, the reporting procedure is to recognize that investment as a financial investment, normally recognized at fair value on the statement of financial position. Another scenario that could occur is a scenario where P acquires a stake in A to the extent that P controls or purchases 220 out of 1,000, which means in this case 22% of voting rights. When that happens, 22% is significant influence, but not enough to control. Okay, 20% and above, significant influence, but not enough to control. So in that case, the relationship is associate. We have an associate relationship between P and A. So you can see from 0 to 20%, we say is a simple investment. From 20% to 49.99%, we're saying is an associate relationship. And from 50% and above, we're saying something else, which I will mention in a minute. But with an associate relationship, we use equity accounting. In other words, P does not control A. So when P prepares the group accounts, P does not include all of the assets and liabilities of A because A is an associate. So we use equity accounting. The other scenario that we could find is a situation where P then acquires a substantial stake in S to the extent, for example, that P acquires 750 out of the 1,000 shares. In this case, we have 75% voting rights. Now P controls A because P has 75% of the decision-making power. So this is equal to control. When that happens, we have a subsidiary relationship. So the first relationship is a simple investment. The second one is an associate relationship. And the third one is a subsidiary relationship. In this case, S is a subsidiary, and so therefore we use acquisition accounting. So this is when we include S's income statement, statement of changes in equity, statement of cash flows, statement of financial position. We include all of these statements into the group accounts when we prepare the consolidated financial statements. So that's the kind of relationships that do exist. I've given you a table. You'll find that in your Moodle book, but also, as I said, I'll post these slides online. But you can see this table really summarizes everything I've said so far. If a company invests in another company up to 20%, then there isn't really that much influence. And so we can regard that as a financial investment, often recorded at fair value in the statement of financial position. On the other hand, if the investment is greater than 20% or more, but under 50%, then that's significant influence. There's an associate relationship, and we use equity method. Finally, over 50%, there's control. Now, these are obviously quantitative measures. The IFRS 10 and IFRS 3 gives you indication as to when A company could actually own, say, 45% and still control another company, depending on the nature of the relationship. So have a look at IFRS 10 and IFRS 3 for clarification of those. Okay, but also I've given you examples in module book. So how does the standard then define a group? A group is defined by IFRS 10 as an arrangement whereby a business, so one business, P in this case, chooses to establish or invest or acquire other companies through which then it decides to run its operations. So that's a group. A parent company could be based in the UK, buys a subsidiary company in France, establishes a subsidiary company in Germany, buys another company in the US, and so on. When that happens, all of these companies become part of the group. So the parent company then is a company that controls other companies, okay? Controls more than one or more entities. So the example I just gave, a subsidiary company, on the other hand, is a company that is controlled by the parent. And an associate entity is an entity over which the parent has investment or significant influence over, but it does not control it. And it is not just a simple investment or a joint venture. Okay, so those are the definitions that the standard provides. I just wanted to capture a really simple group and then look at a relatively more complex group. So when we talk about control, in this particular example, you can see company A here is the parent company. A controls 33% of B. A controls 100% of C, but C controls 20% of B. So what kind of relationship will exist between these companies? Well, the relationship that will exist is such that A controls C 100%. So C is a subsidiary. A also owns 33% of B directly and 20% of B indirectly through C. Because A controls C 100%, the 20% ownership of B also belongs to A. So in that case, A controls B and C. So in other words, C is a subsidiary of A and B is a subsidiary of A. What is important in this particular example is that you shouldn't just look at 33% control and say, oh, this is an associate, based on the quantitative measures that I gave you in that table. So 33% directly, 20% indirectly, that's about 53% control. The other example, a relatively much more complex example, and I'll stop talking in a minute and then ask for your questions, is a scenario where you have P, which is the parent company in this example, controls 75% of Q. So we know that Q is a subsidiary. P also controls 100% of S. And Q controls 25% of R, and S controls 30% of R. So what kind of relationship will exist here? I think the first two are relatively simple because this is over 50%, so this is a subsidiary. This is 100%, so S is a subsidiary. But how about R? P does not directly control R, but P controls S 100%. And of course, 75% is control as well. So the relationship that will exist in this case is that S is 100% subsidiary of P. Q is also a subsidiary of P because it's 75%. Control of R then for P is 55%. Why? Because P controls Q and Q owns 25% of R. P controls S and S owns 30% of R. So control of P is 55%. The implication here is that P actually controls S. Okay, so that's the general idea. So in essence, you will come across different scenarios that you will be asked to determine whether one company controls another company or whether the relationship between those companies is basically an associated relationship or indeed a simple investment. Okay, so the next steps I will encourage you to do before I stop talking and ask for your questions is, again, to study the lesson notes that you've been provided on Moodle. If you have any questions, do post them on the online discussion forum. I'm more than happy to address those. If you want a one-to-one meeting with myself, or if you are studying as a group and you want to have a chat with me, I'm happy to arrange that as well. Any videos that we post online, try as much as you can to watch them to the end. We try to keep the videos really short. The two videos I've posted on Moodle, I think one is just about 11 minutes long and the other is 12 minutes long. So we try to keep the videos short and sharp so that you will have the opportunity to watch them to the end. Try the lesson 7A and B class example question and solution. The solution is available on Moodle as well. And once you've done that, look at the quiz and then prepare for your tutorial sessions online. Okay, that's it from me. So let me stop sharing and ask for your questions. Any questions?
Hi, Professor. You mentioned that there are two videos, but on the Moodle page, I can see only one lecture video.
Yes, so the one video is for lesson 7, and I will be making another video available for lesson 8.
Okay, thank you. Also, I actually have a question. As from the materials, when I've seen, it says that if your voting rights is greater than and equal to 20%, you are an associate company of the bigger company, right?
Yeah.
So I'm just wondering, like, is there a scenario where your voting rights is still less than 50%, but you're still a subsidiary of that company?
Yes, that's what I was explaining earlier. Absolutely. A very good question, actually, because a company could control, let's say, 45% of another company, and that company becomes a subsidiary. This could be in a case where, say, for example, the management of the bigger company, of the parent company, is aligned with the management of the smaller company, or the line of business of the bigger company is aligned with the line of business of the smaller company. In which case, the bigger company will obviously have much more of an influence compared to the smaller company.
Yeah.
Do you see that? So essentially, the bigger company will be controlling the smaller company, especially if the management is aligned. So in other words, the key decision-making process may probably come from the bigger company.
Okay, so then when they are preparing their books of accounts, do they still say that they are an associate even though they are less than 50% voting rights?
So the quantitative measure is not the only measure. Okay. And IFRS 10 actually gives you, the example I'm giving you is from IFRS 10. Okay. So it gives you further examples where you can actually look at the relationship and the nature of the business, and then you can determine whether 45% or 48% is actually control or whether it's just an associate relationship.
Okay, that makes sense.
But further information should be available for you to be able to make that decision.
Okay, thank you.
No problem. Okay, any other question? Any further questions? Okay, I will leave it open for a while. If you are typing a question, I will wait for a while so that you can post that on the chat forum, and I'll try to address that. Or alternatively, you can basically just unmute yourself and speak to me.
Sorry, just the question about the slide that where you spoke about the parent company P, it owns a subsidiary, and I mean, if Q and R are subsidiaries of it, and Q and R own a significant share in another company, then P is ultimately a subsidiary of that particular company, say a third party, like through another subsidiary, right? I mean, the second last slide you were talking about.
Okay,
Yeah. So I just wanted to know, like, in that does that situation actually, how complex is that situation if you put it in a real life scenario with the market?
Right. Let me just share this slide again so that we can then talk from there. I think you are talking about this.
Yes.
That one.
Yes.
Okay. So you are asking if a situation where R
it's ultimately a subsidiary of P because P controls S and Q. Yeah. So I'm asking, like, this kind of relationship it seems a bit complex because it's going through another company. So how often do you find such situations in the market?
Oh, in the market, very, very often, actually.
Okay.
Because this is just a simulation of actually a very simple company. If you think about it, most multinational companies will have 10, 15, 80, 100 different companies within the group.
Okay.
And those relationships become even more complex when we are looking at investments in different countries or different geographical regions. So yes, in actual practice, you find these kinds of relationships on the market. But the simple idea really is you look at the parent and the ownership of the parent in the subsidiaries and whether or not these subsidiaries have other subsidiaries. So in actual practice, you'll find one parent company with, let's say, 5 subsidiaries. You find these subsidiaries that have other subsidiaries, and those subsidiaries having other subsidiaries and associate companies and joint ventures and things like that.
Okay.
But for the purpose of the cause, we don't want to make it too complex.
Yeah. But then does the parent company, if they have, like how you said, a subsidiary has its own subsidiaries and so forth, does the parent company mention all that in their financial statements?
Yes. So if, say, for example, in our example here, let's assume P controls S. So S is a subsidiary of P.
Yeah.
If S has another subsidiary, say Y, then P controls Y.
Okay.
Yeah, so therefore P should include Y in the consolidated financial statement.
Okay. So basically the main function of P gets their finances is from these other companies more than doing their own function, right?
Yes, that's the idea.
Okay, thank you.
No problem. Okay. Okay, very good question. Someone is asking the calculation of the ownership of R. Good. So let me share the slide so that I can explain why the ownership is different from from control. I think this is the question that the person is asking. Okay, let me see if I can. Good. Fantastic. Right. So ownership of R. You see that P controls R 30% because P controls S 100%. So therefore, this 30% ownership of R belongs to the shareholders of P because everything in S is owned by P 100%. So that's the 30% here. Okay. However, P controls only 75% of Q. So therefore, Q's investment of 25% is in R, is only controlled, P only controls 75% of Q's investment in R. Okay, I see. So therefore, I made a mistake here. So this shouldn't be there. This is 30% of that. This is the 30% here. And so 75% of 25%, which is 18.75%. So my mistake. I'll correct that before I post that online. Okay, so basically, P controls 100% of S, and so therefore the ownership of S in in R belongs to P. So that's the 30%, the initial 30%. But P only controls 75% of Q. So therefore, P only controls 75% of the 25% in R. So again, sharing that just to clarify that particular point there. Okay, so 30% direct control because P owns 100% of S and S owns 30%. So in essence, P controls 30% of R, which is a 30% there. And then P controls 75%. So P only controls 75% of the 25% in R. So that's why you have the 48.75%. Okay. Does that answer your question? Okay, great. Okay, there's still time for more questions in case you have questions. Alternatively, as I said, do not hesitate to post something on the discussion forum. I mean, it's not a forum that I'll be manning 24/7, but I would definitely make an effort to have a look. And if you have a question there, I will try as much as I can to respond. Okay. Another thing I will say, practice as much as you can. The practice questions are available or will be available on Moodle. Actually, for lesson 7, it's now available. If you have any difficulty going through those questions, then again, the discussion forum is there for you to post your questions. Or you can even send me an email if you have a specific question that you want me to address. Okay. Okay. Any other question? Everybody seems quiet now. Okay. Right, as I said, I'll post these slides on Moodle. So have a look at Moodle if you want to recap on what we've discussed today. And of course, if you have further questions, do not hesitate. It seems no one has another question. I will still be on here for a few more minutes, just in case someone is typing a question and I don't want to miss anything. Alternatively, if you don't have any more question for me, then I suppose we'll call it a day. What you want to do is to have a look at the practice question, because you will be discussing that in your online workshops or tutorial groups next week. While you are going through those questions, if you are finding any difficulty, then I'm happy to help. Okay, someone is asking a very important question. Will we be required to prepare a consolidated financial statement in the final exam? Possibly. So consolidated financial statement is an examinable question, it's an examinable topic. Trang has already explained to you the topics or the units that are going to be examined in your in-course exam. Also, you have looked at ratio analysis and interpretation of financial statements in your group course work. And so therefore, Unit 3 and 4, and probably Unit 2 as well, will be assessed or are all accessible in the final exam. So yes, absolutely, consolidated financial statement is examinable. Okay. Right. Any other question for me? Okay, but the calculation of control of R was a really good question because my typo error there should have caused some confusion. Right, another question, whether I know the exact date of the exam. No, I don't know the date as of yet. Sorry, my phone just went off. I don't know the date as of yet, but that date will be published online way ahead of time. Okay. Hello. Oh. Okay. Any more questions for me? Yeah. Okay, good question. Interesting one. What if a subsidiary company also has a stake in or a holding in the parent company? Okay, well, when you think about it, the parent company controls the subsidiary company. So what is left in the subsidiary company is either what we refer to as non-controlling interest or what we refer to as in the UK as minority interest. So the minority interest, let's say the remaining 10% that is not controlled or the remaining 20% that is not controlled by the parent is actually the business that is being carried out by the subsidiary is controlled by the parent. So therefore, there really isn't any real possibility of the subsidiary having a stake in the parent company because the subsidiary is part of the group that is controlled by the parent. Okay, so the non-controlling interest or the minority shareholders do not have a say in the running of the company. It's only the parent shareholders that have a say. Okay, in theory. Okay, however, the subsidiary company can have another subsidiary. So they can invest in another company, say 80%, and they can control that company. But in which case, the parent company also controls that company because it controls the subsidiary company. Okay, does that answer your question? Okay, good. Okay, I'm still going to be on here just in case someone is typing a question. Alternatively, just unmute your mic and speak to me. For next week, I will be posting something on Moodle just to remind you of the live session, and to also say if you have a question that you want me to address, then you can send those questions to me either by email or you can post to the forum. And then once we get to the session, I will try and address those questions first, and then we can address the rest of the other questions. Okay. All right, so, but in any case, we still have a few minutes for you to ask any further questions that you may have. Okay, if there are no more questions, then we probably need to call it a day. Do engage. If you have any issues, do not wait to the end. Do not wait close to the exam. Let us know whether you have any issues, and we're more than happy to help. Use Moodle to post your questions, or use email, or you can get in touch with me during the live sessions as well. Okay. There are no more questions, then we can call it a day. Hopefully I get to see you again next Friday, or you get to watch my videos. Okay.